Today guys, so for today we'll be looking into cost classification. So under cost classification we have a few subtopics. We'll be looking into the cost object. Okay, what is cost object and how does it relate to costing? And then we look into the types of costs that we have. Okay, like we have direct costs, indirect costs, product costs, period costs. And then we look into the cost behavior. Okay, like variable costs, fixed costs, step fixed costs, semi-variable costs. And then we move on with looking into more cost behaviors. We have ranging from relevant to non-controllable costs. Right? So then let's look at what is exactly cost object is all about. So basically, cost object is an activity which a separate measurement of cost is desired. Okay? Example, like there is a cost of a product or cost of a rendering service. So let's say your company were to produce t-shirts, right? Okay, this t-shirt would be the cost object, which means whatever activity that we are going to do with this t-shirt, it has a separate measurement of cost. Okay, for example, let's say if this t-shirt were to be produced by your company, then you need the raw material. Okay, and then you need any type of cost transportations. Okay, or employer, whoever is going to work for it. Okay, so this would be the cost object that desires a new measurement of cost to be done. Alright? So costing is actually a process of determining the cost of doing something. What would be the cost of it? So this helps us to see what would be the cost. Okay, the cost of this particular product or this particular cost object. How does it relate to each other? And this is very important for management accounting. Why? Okay, because without costing, it is very, very hard for you to know what would be the expenses of your production. Okay, so you need to make sure that whatever cost object that you're looking into should be accurate and there are informations on it. Okay, so under types of cost, we have a few types. We're looking into direct cost. Okay, direct cost is any type of cost that can be traced directly into the production. So we have three types of direct cost, which is direct material, okay, direct labor, and direct expenses. Okay, these are the three costs that is under direct cost. Okay, and as for indirect cost will be any cost that cannot be traced directly. For example, we have manufacturing overhead. Okay, examples of manufacturing overhead will be like cost of electricity, the rental of the factory. Those are the things of the example. For direct material, we know the example will be raw material. Okay, for direct labor would be the employee or the workers who is involved in the production. So production workers. Okay, any direct expenses or the expenses of their transportations. These are the examples of direct costs. So indirect costs would be manufacturing overhead, also called as manufacturing overhead. Okay, these examples as I've given just now: rental, electricity bill, utilities bill, salary of your security guard, salary of your supervisor. That has nothing to do with the production, but they are in need in order your production to run smoothly. Alright? Okay, let us look at this diagram. So over here you have the direct material, okay, direct labor, and the manufacturing of it. So the combination of all these three is what we call as manufacturing costs. Okay, and these manufacturing costs also are called as product costs. Okay, so product cost is actually the total manufacturing cost. Okay, so in this product cost, you can derive further two more costs, which is okay, prime cost and conversion cost. So prime cost will be DM plus DL, and conversion cost will be direct labor plus your manufacturing overhead. Okay, as I said just now, product cost will be everything to do with your production. Okay, your production of your product, and that would be the product cost. Period cost is basically any type of cost that is non-manufacturing cost, as has nothing to do with the manufacturing. Example, over here you have selling expenses, okay, you have administrative expenses, or sometimes you have distribution costs, distribution expenses, and then you have marketing expenses. So these are the things that normally does not happen in a production. Okay, it happens normally in like HQ, okay, or in office. Okay, that has nothing to do with the production at all. It is not included in any of the stock valuation. Also, it is treated as an expenses in the profit and loss. Alright. So under product cost, you know that okay, the combination of direct plus indirect. Okay, and then for period cost is anything that other than the product cost. Okay, alright. So over here we'll be looking at the manufacturing cost flows that we have. So you can see there is a direct material, there is a direct labor and manufacturing overhead, and then you see two more new stuff, which is the opening work in process and the closing work in process. Okay, this schedule will be prepared for us to see what will be the cost of goods manufactured. Okay, similar like in the income statement, you see cost of goods sold, right? So the same thing over here. If that particular company is a production company, we will see how do we come up with this cost of goods manufactured. So for the first thing first, you have your direct material. Okay, under direct material, you have the opening raw material. Okay, you need to add with your purchased raw material for you to get raw material available for the usage. And then you need to minus with the closing raw material. The reason why we need to minus the closing raw material is that these are the raw materials that we yet to use in production. Kita belum guna dia lagi. So when we are not using it, then it should not enter into the raw material which is used in the production. Alright, so that's why we are minusing it off. And then you'll get the raw material used in the production. Okay, and you have to add with the direct labor, and then you need to add with your manufacturing overhead. So given over here, you can see that they have given a list of example on manufacturing overhead. Factory supervisor, rental machine, factory insurance, okay, utilities, factory utilities, property tax and factory. Okay, if you were to look into it, you can see that everything is relating to the factories. So whatever information that should goes into manufacturing overhead would be everything relates to factory, relates to okay, to the production. Okay, and then once we already have raw material, direct labor, and the manufacturing overhead, we'll get our total manufacturing cost, which you need to add with the opening work in process minus with closing work in process in order for you to get cost of goods manufactured. And this can be furthered. Okay, this can be furthered. So in order for you to calculate your COGS, cost of goods sold, okay, all you have to do is take your cost of goods manufactured plus with opening finished good inventory minus closing finished good inventory. Alright, then you get COGS. So this is basically letting us know how do we calculate the cost of goods manufactured using raw material, direct labor, okay, and then using to add in the work in process, and then closing, minusing off the closing work in process, and hence. Alright. Okay, so let us look at cost behavior. So under cost behavior, over here I've given you a few cost behavior. So I have separated into the main one and then the other cost behavior that we have. Alright. So under cost behavior, first thing first, we're going to look into variable cost. So variable cost is a cost that is directly proportionate to the level of activity. Okay, if the level of activity were to increase, then the cost is going to increase. If the level of the activity were to decrease, and the cost is going to decrease. So how do we get a graph? Like what would be the graph look for a variable cost? So the graph will be similar to this. Alright, which means doesn't matter what type of this is the currency, okay, the amount, and then this will be the level of activity. Okay, level of activity. So the moment that the level of activity is increased by 2 unit or 10 unit, okay, and the variable cost increases. Classic example that we have in variable cost would be raw material. Okay, for fixed cost, okay, this is a cost that has no changes. Doesn't matter if the level of activity going up or down. So it will be fixed. Okay, the name itself. Okay, no changes. Okay, no changes at all. It will be stagnant or it will be constant. So the graph will be like this. Okay, level of activity, and then you have currency. Okay, you have level of activity. Okay, so it will be constant. There wouldn't be any changes or whatsoever. So it doesn't matter you on that particular month you have increased the production curve or you have decreased the production curve. Okay, at the end of the day, this particular cost will be still the same. Okay, example, you can give rental of factory. Rental of factory, even though that particular month there's no production, maybe due to COVID-19 or whatsoever, you still need to pay your rental. Okay, so please bear in your mind whenever you're giving examples for management accounting, so overall, you need to give a very in detail examples. Let's say I'm going to ask you exam, list down 2 types of variable costs. You need to make sure that whatever variable cost you're talking about is actually in detail. Raw material used in the production, examples. Okay, or the direct labor, or the employees, salary of the employees. Okay, whatever it is. Okay, for fixed cost, rental of factory, you need to make sure that there's a name of factory there. Okay, don't give me something very basic or very vague. Okay, you have to make sure that you are very precise in giving the example. Okay, for step fixed cost, it's basically a graph that looks like triangle. Okay, step. So what is exactly step fixed cost? Step fixed cost is actually provides a relevant range. Okay, it has a range of a fixed cost. Okay, so example I give you, like for example, in your company we have 4 machines. Okay, each machine can only work for 1000. Maximum capacity is only 1000 units. So maybe from 0 to 1000, okay, it may cost around 2000. Okay, 1000 unit and cost around 2000. Okay, so from 0 to 1000, doesn't matter at which point of this within this maximum limit, it will still cost around 2000. So the moment you have 1001 to 2000, then it's going to increase by let's say by 6000. Then there will be a different step there. Okay, so which means there is a step. Okay, it normally involves of range. Alright, so example given there, semi-variable, it has a mixture of fixed and variable. So even the graph itself won't start at 0. It won't start at, okay, it will start in the middle where it has both the combination of fixed cost and the variable cost. So example over here we can take for example like telephone bills. Okay, you have a fixed charges, and then let's say if you were to do extra calls to overseas or any roaming calls, or if you were to call to any toll-free numbers or whatsoever, any toll numbers, okay, so that's going to charge extra to you. So those things will be the variable costs.
Okay guys, so next we'll look into analyzing a mixed cost using high-low method. Okay, so the following data, it relates to the unit shipped and total shipping expenses incurred by Axis and Riyadh Berhad. So you have the month of shipped, alright, as well as the unit expenses together with the total shipping. So we're going to calculate what will be the variable cost per unit and what is the fixed cost using this high-low method. So for the formula would be, for variable cost, highest activity cost minus the lowest activity cost, divide by highest activity unit minus the lowest activity unit. Alright, and then for fixed cost, we have highest activity cost minus the variable cost per unit times by the highest activity unit. So in our given information set about Axis and Hamad, we will be able to know that June is the highest, okay, with 2,700, and July will be the lowest with 2 unit expenses, and total shipping will be 1,200. Okay, so for us to calculate the variable cost per unit, so we need to take the highest activity, which is 2,700, minus with 1,200 divided by 8 minus 2. So you have 1,500 divided by 6. So if we were to do the calculation, so the variable cost per unit will be 250. So RM 250. So from this information, you straight away going to apply in fixed cost. So for your fixed cost is equivalent to 2,700 minus variable cost per unit is 250 times by the highest activity unit, which is 8. So from there, we can calculate 250 times by 8 will be 2000, and 2700 minus 2000, the fixed cost would be RM 700. This is the total fixed cost, RM 700, and this would be the variable cost per unit, which is RM 250. Alright, so moving on. So basically, relevant cost is any of the costs or any of those future costs that will be changed by a decision. So for example, if I were to produce product A and product B, what are the costs that I have under product A? Okay, and under product B would be the relevant cost for producing product A and product B. So if I were to come with the decision making that I'm going to produce product A, so the cost that over here would be my relevant costing. Okay, irrelevant costing would be those future costs that will not be changed by any type of decision. For example, let's say I made a decision that I'm going to produce product A. So irrelevant cost will be whether I'm going to produce product A or not in future. I still have to be incurred, okay, certain costs that I still need to be paid. Okay, certain costs will be still incurring, whether in future I still continue with product A or discontinue product A and move on to another product. This particular cost will be still there. For example, like your factory rent, your depreciation of machines, those things. Alright, avoidable costs will be the cost that you can save or you can eliminate, alright, by choosing an alternative. Okay, let's say I have department A. In this department A, I made a decision to discontinue the production. So, okay, what are the avoidable costs that can be avoided? Okay, by me eliminating department A is the clerk's salary. I can avoid it. Alright. What would be unavoidable is that even though if I would have taken decision to eliminate department A, okay, I still need to pay the rental. I still need to pay the supervisor. That would be my unavoidable cost, which means the cost that cannot be saved, the cost that I cannot eliminate. So sunk costs would be the cost that already happened. Okay, sudah berlaku, right? And this one will not be affected by any types of decision that we're gonna make. Okay, for example, we can talk about the cost of any type of non-current asset. Doesn't matter if I'm gonna eliminate department A ke, I'm gonna open a new department B ke. At the end of the day, my cost for my non-current asset doesn't matter whether what type of current asset, okay, building ke, vehicle, will be still the same. There's no changes for it. Okay, and normally it is irrelevant for your decision making. And for opportunity cost will be the cost that measures the opportunity that is lost or sacrificed when choices of one course of action requires an alternative course action to be given up. Okay, let's say in your company you're given a choice to produce product A and product B. If your company were to choose product A, then you are losing all the benefit that you may attain, you may receive by producing B, which means whatever income that your company may receive by producing product B. So that would be the opportunity, which means you're losing, you're sacrificing, okay, one choice of this is a choice, this choice, because you have chosen this alternative. Incremental would be the differences between costs and revenues for the corresponding item for each alternative being considered. Okay, for example, let's say I have the similar product A. I'll be looking into, if I were to produce product A, what is my expenses? Okay, what is my expenses? If I were to do product B, what is my expenses? If I were to produce product A, how much of revenue? Okay, how much of revenue I'm going to create? How much of revenue? So which one is more? Can I create more revenue by producing product A, or can I create more revenue by producing product B? Okay, that is what we call as incremental. So this is a group of additional unit. Okay, this is a group of it. All right, and then we have marginal. Marginal is more like incremental cost. Marginal is talking about only one output at a time. So meanwhile, like incremental is talking about the whole thing. For example, if it's 100 unit, you are thinking about then how much would be the revenue. But marginal is only talking about one unit. So what would be the cost? What would be the revenues? All right. And for controllable and non-controllable costs, this two is normally for the cost of control. Okay. So for controllable means any type of cost or any cost that is reasonably subject to the regulation by the manager, whose responsibility that the cost is identified. Okay, so which means the manager, which means manager has the power to control, has a responsible to control it. Okay, so that would be the controllable cost. For the non-controllable cost, which means the manager does not have any power, tak ada power langsung. He hasn't have any control. Okay, example, let's say if I were to be a subway manager. Okay, so what I have under control cost would be the number of bread that I want to order. Okay, meanwhile, what would be the non-controllable cost is that, okay, the price of the bread. I can control the unit, but I am unable to control the price of it. Alright? So each of these costs has their own cost objective. For example, whichever we have over here, everything in green color, this is for your decision making. Okay, so from just now we'll be talking about, okay, what will happen to if I were to choose A, if I were to choose B, what will happen if I were to eliminate. So that's considered your decision making. Okay, and for the controllable cost and the non-controllable cost, this is for your cost control. Okay, for your cost behavior, for your fixed and variable, you have both. This is for both, okay, decision making as well as control. And then for your valuation, you have all this. This is for your valuation. Alright, so I hope, with that being said, I hope you understand what is cost classification, how does cost classification helps in business, how does it helps in the decision making, and how does it helps in the cost of control, and how does it helps in valuation. Alright, with that being said, see you guys in next lesson. Take care, bye bye.